A very beautiful morning to everyone today. Welcome once again to Morning Market Review by Rally Trade, where we make money daily. My name is Victor, and I'm going to be your host this morning for the morning review. And right about now, we have 24 persons on the call, 25, okay, and growing. So 26. Let's just wait for like the next 2 to 3 minutes before we actually start off. Good morning, Adebola from Kure and Father Solomon from Ibadan. Good morning, welcome once again. So let me introduce myself. Abola and Victor from Abuja, right? Nice to have you all here. Nice to have you all here. So just in the next like 3 minutes max, we should be able to kick off the morning review. Good morning, Anthony. All right. So please just hang in there and let's allow us to join the call. So we'll not be going back and forth. Thank you very much. The audio will be back in the next 2 minutes. We're just trying to wait for others to join the call. Good morning at Raining Ward. So there's audio actually. All right. Good morning, Chinedu from Asaba. Okay, good morning, everyone. Welcome once again. So for those saying no audio, we're just trying to wait for you to come in actually. Now that you have come, so I think we just start off the review while others join us when they come, right? My name is Victor again, and I'm your host for this morning market review. So we're all here to make money. But you see, so wisdom is profitable to direct. You need some level of intellectual skill in order to be able to make the money here in the markets. This is not something you do by your strength. It's something to do with your sense, right? So what we are trying to do is to give ourselves wisdom, give ourselves sense, apply sense to trading the financial market. Every business needs a technical know-how, right? If you are an artisan, you need to know how to use your hands. If you're a professional, right, you need to have the knowledge. The basically everything is skill. So here in the market, we're trying to learn the skill We're trying to perfect the skill. For some who have really been learning, we're trying to perfect the skill, right? And for some who have perfected skills, they are trying to develop new stuffs in the market. So basically today we're just going to be looking at the market and looking at the possibility of buying and selling, because that is how we make profit in the market. Now, you need to understand when to buy and where to buy. It's about timing, all right? It's about timing. So a lot of markets. Sometimes it is not as if you don't understand what you are doing, but a lot of times is the fact that your timing can be very wrong. Please, just want to confirm, can everyone hear me? If you can hear me, please type a yes on the chat box, so I know I'm not talking to myself. Good morning, Ernest. Please, I need to know if you can hear me. Audio not good. Emmanuel, audio not good. Did I'm not speaking loud enough, or okay? I think for a lot of persons, my audio is good. So please check your device at Emmanuel. All right. Thank you very much for your responses. I really appreciate it. All right. So let's continue. So I'm trying to point out what we do wrong, because the truth is this: some persons have actually burnt their hands, or a lot of persons burnt their hands in trading. Hence, if you don't try to find out why you burnt your hands, you most likely keep repeating the same mistakes that you have been making. All right. So before we just dive into everything, it's really better that we have a much better and clearer perspective in approaching this particular market. Now, as I was saying, let me come to a chart here. For instance, um, this is USDJPY. For instance, let's say uh, the basic rule of trading, the basic rule, what you first of all learn, or what you must know, is the fact that you always want to buy at support and you always want to sell at where? Resistance, right? Good. So I'm going to be asking, some stuff, want you to fill in the gap so I will know we are together. So you literally want to buy at support. So for instance, I'm supposed to be buying from, oh, just hold on a bit. My chat is really hungry. Just hold on a bit. Sorry about this. Um, okay. So let's say you're supposed to be buying from somewhere around here. And let's say this is a support area you're supposed to be buying from. Okay, for instance. Now, just because you feel, okay, let me just buy this guy, and where it is right now, you place a buy, hoping that price goes up. And by implication, you all know that if you buy and price keep going down, you'll definitely be negative, right? Now, you bought at current market price, but price keep tumbling down, and possibly you had your stop loss around uh, somewhere here. I don't know why my system is slow this morning. After buying at current market price, some persons had their stop loss here, okay, at this level, or some might even shift it a bit down. And coincidentally, price came down, took out your stop loss, got to the main support you thought to buy from, and then started going up as you expected. Now, you analyzed correctly, but your timing was wrong, all right? Your timing was wrong. And in case you didn't have a stop loss, because I know some persons do trade without stop loss, the implication is also that price will go down first, which by implication, you are going to be having drawdown. Now, the drawdown is a function of your lot size. So if you are using a huge lot size, standard lots and the like, your drawdown, your negative is going to be huge. And in case your account is not sizable enough, it can clear accounts before it starts going your direction. Haven't you fall into that situation where, let me ask you a question now. You placed a buy, price went down, possibly took out your stop loss. Immediately, like almost immediately taking out your stop loss, start going in the direction you wanted it to go initially. Or immediately price wiped your account, instead of going in the direction you wanted. How many of you have been in that position before? I just need a yes on the chat box, right? So I'm trying to fish out some common mistakes that we do. If you've been in that situation, can I have a yes on the chat box? It happens to you. Okay. Just few persons. Some persons don't want to let us know, but it's okay. It's all right. It's all right. Okay. Thank you very much for your responses. Now, it's a common mistake among traders. It's a common mistake. Now, that is the issue of timing, okay? Because I believe not everybody here is a complete novice. Trust me, that little you know, right? It's good to an extent to help you make money. But you see, there's a saying that the patient dog eats what? The fattest bone. Sometimes, like I said, timing can be the issue. But the problem is this: we have a lot of persons who are not patient enough to wait for price to get to where it ought to get to before execution. So we have what we call this, it's becoming an addiction. You cannot open your chart without initiating a trade. It will look like you are doing nothing, like you are wasting away. Right? Or there's this FOMO, fear of missing out. What if I take this trade now? Maybe the last time you felt like if I buy now, I can make money, and you ended up not buying, and price later went up, and you felt like, oh, if I bought this stuff, I would have made profit. So the next time you just want to get into the trade, some persons are impulsive traders, some persons are gamblers. Now, if you fall into any of these categories, you most likely keep falling into the trap of the market, all right? So take a good advice. This is a business, hence, you need to treat it as such, all right? Now, how do I treat it as business? The first thing is to analyze my market, and there are different ways to do your analysis. There is the technique, the fundamental analysis. And by the way, talking about fundamental analysis, we had our FOMC last night, Federal Open Market Committee, which talks about the interest rate sets. Unfortunately, it fell short of what they used to do before. That's 5.25 basis points. But now it's reduced to 5.0 by 50 basis points. Okay. Hence, you could see some significant drop in the dollar as of last night. Now, one of the tricks with FOMC is the fact that, so let me, for instance, if I pull out good, because I know a very good number of persons trade good. So here was price before the FOMC. Okay, at Felix, don't worry, we are all here together, right? You get the best advice for FOMC. Now you can see how massively, this is a 15 minutes time frame. You see how massively price pulled up at the weakness of the dollar, and all of a sudden you could see some massive retracement, which even went below where price was before the FOMC. And now you can see a recoupment because the dollar currently is also down. So I think price is still reacting to the weakness of the dollar from the FOMC. All right. Now, once that keeps happening, your gold keeps pulling up, and it can affect other things in the market. One of the things we trade more, 85% of traders trade the US dollar. And a lot of times you can see across so many instruments, just as you can see here, this was FOMC effect, price pulling up, retracing down. And now because of the weakness of the dollar, you can see how massively price is tumbling down at the moment. The same thing for USD CHF, the same thing for the USD JPY. Now, let's now attack this market because our technical analysis for today, which is the 19th, all right, today, basically we are having another technical analysis, major fundamental, which is the GBP. Now, we're not talking about it because it has passed. This for AUD, employment change, unemployment rate. Now, we are just majorly focused on the ones that are yet to come out, which is by 12 p.m. today. We're going to be having an equivalent of the FOMC This time around is for the pound, all right? Monetary policy summary, the monetary policy, official bank rates, and the official bank rate rather, then the MPC official bank rate. So just like the FOMC of the USD last night, by 12 p.m. today, we are going to be having equivalent of it for the pound, right? So expect some massive volatility. Then also for the US dollar today, we have unemployment claims. Hopefully this might strengthen the dollar. All right. Now, the good thing about the market is either the dollar is strong, the dollar is down, either the pound is strong, the pound is down. There are always opportunities to make money. Yours is just to find out which direction is going and you follow and you make the money in the market. So we are expecting, I think the last time they had 230,000, they're expecting 230,000 persons to file for unemployment. Now, unemployment is one of the major indicators which they use to measure how viable an economy is doing, if it's expanding or contrasting. So for the economy to employ more persons, it means that the economy is expanding. And if people are losing jobs, right, it means the economy is contrasting, which is bad. So hence, we don't need more persons to lose their job. Instead, we need more persons to get jobs. Okay. Hence, we are not expecting a figure greater than 230,000. We need less persons to lose their job. So actual here, less than our forecast is going to be good for the dollar today. So guys, let's watch out for the unemployment claims by 1:30 p.m. today. So let's dive into our technical. So we are going to be a bit fast today. So I'm just going to be teaching you just a little trick, okay? Just a little trick, a very quick way to analyze your market. Now, for every chart that you open, every single chart that you open, there is always a directional bias. By directional bias, I mean price is always tending towards a particular direction, just like a river. A river is flowing to the right, to your right. If you stand and look at the river, it's flowing to your right. It's coming from the left, going to your right. Now, it will be in your best interest to just jump into the river and allow it to take you to the right. If you are trying to swim against the tide, it's going to be detrimental to you, okay? So every chart has a directional bias. Now, the funny thing now is, or the most tricky thing there is the fact that the directional bias has a general trend and it has an intermediate trend, which is the overall trend. For instance, this is USD/JPY, and if I use my monthly time frame, you can see that my chart is mostly headed towards the upside. If I use my weekly time frame, you can see my chart is headed towards the upside. All right. So at least from what I can see here, is from 2012, at least till date, price has been tending to the upside. And if I zoom out more, you'll see from 1999 till date, USD/JPY has been tending towards the upside. We can still go further back. Now, it means that this guy, the overall trend is an upward trend. But we have an intermediate trend because inside the upward trend, goes up, you can see some significant downward movement, right? Hence, as much as it's an uptrend, there are times where price will go down, and these downward movements are what we call retracements. Retracement happens all the time, right? So in order for us not to be caught in the mix, I want to know if price is actively trending up or currently doing a retracement. So for USD/JPY now, just like I explained, for USD/JPY now, we mentioned about the GBP Direct by the time this comes out. Now, I can't give you a direction right now because it's not a dated news, for instance. It's a speech for GBP. It's a speech. So you never can tell what they're going to be saying in that speech, actually. Okay. So back to what we're talking about. We mentioned the fact that our overall trend for GBP USD/JPY rather is an upward trend. And you get that from your weekly and your monthly time frame. It gives you the general overall trend, right? So hence, but I also mentioned the fact that price does a lot of retracement, right? So now, currently, is USD/JPY going up or has it been retracing? I need your responses. Is USD/JPY going in the direction of the trend currently, upward trend, or is it currently doing some retracement? This is an open question. I need your responses. Retracement, retracing, retracing, retracement. Okay, very good. Good, thank you so much. Now, yes, as you can confirm, USD/JPY is actively retracing, all right? Actively retracing. Now, sometimes for the retracement, we need to look for major areas where price has retraced to before, and hopefully price can get there and start going back again in the direction of the trend. So if you check the last time that price retraced massively, right? Last time price retraced massively, such as this was where price stopped. This was where price stopped, all right? When it retraced massively. Trying to capture it all the way here. Okay. Now, and the last time again, we had another massive retracement. This is not massive. I'm talking about like this is weekly time frame. For weeks, it kept going down, right? This was just for like 2 weeks. Now, this was for weeks again, it kept going down. So this is another place of massive retracement where it ended. Hence, if price doesn't stop here, this is where it's headed, right, before it stops. But hopefully price stops here. And you can see that immediately it got here for last week, price is giving us some bullish momentum. All right, if you check your daily time frame, all right, you can see some bullish momentum. Okay, now 4 hours. Now you are going to start working your way down. So let's not go into that right now. So basically, this is what I'm just trying to say. We have a directional bias at every point in time in the market. One simple way to identify it is to go to your weekly and your monthly time frame. But these are for mostly swing traders who want to leave their position for a long time. Now, for people like us that are most likely intraday traders or day traders, some persons can be scalpers. You want to know where price is most likely going to go for today. Now, this is what you most likely going to be experiencing. Simply just use your 4-hour time frame. Your 4-hour time frame should be able to tell you if price is currently retracing or going in the direction of the trend, which is the overall direction is up, right? So on my 4 hours time frame, I could see some up, I could see down, up, and I could see down. And currently, what am I seeing? I'm seeing up, right? Because price has been, the moment it got to this level, it's been giving me some upward movement. I think I've had 1, 2, and this is the third one. So every upward movement, I'm going to be experiencing retracement. So the simple trick is this. When they say buy at support, sell at resistance, there are so many supports along the way. There are so many supports along the way. And at the same time, there are so many resistance points along the way. Your own is which one is relevant to the trade you want to take. For instance, now, there are so many supports. Here is a support. Let me teach you a trick. Let me teach you a trick, all right? The trick is this. When you look at your charts like this, just look for where you have impulsive move, the start of a massive move. For instance, here is the start of a massive move to the upside, right? Here is the start of a massive move to the upside. Some can be way massive. Here is also the start of a massive move to the upside. Here is the start of a massive move to the upside, all right? Here is also the start of a massive move to the upside. Now, these are significant areas. I'm teaching shortcuts on getting those major support areas. Now, sometimes we can't call them support, we call them demand area, right? So, for instance, now, where do we have points where price started moving up massively? This point here. So, I look at the candle preceding the massive candle, which is this bearish one here. So, I mark the high all the way down to the low of that particular candle, and I extend it to the future. All right. Let me see. Let me take out this one so that I won't confuse you. Just a moment. Just a moment. Just a moment, please. Or let me change the color. Let me change the color so we'll not be confused. Now, once we are done with this and maybe another one, then you just copy and paste. Repeat the same strategy on any chart, all right? On any chart. It works that way. Is the support, so I want to have it possibly as still green. Green is good. And the next one I'm drawing as resistance is what I need to change. Okay, my 1 hour time frame, right? I think I need to change the color of this one. So let's say this guy, what? This color. Okay, good, excellent. Now, I was talking about this particular candle. This was the candle preceding this massive impulsive move to the upside. Okay, so you know every candle has a wick, like a wick up here. This is the high, and the one down here is the low, right? So I marked the high of it all the way to the low, and I extend it to the future, right? I extend it into the future. Now, what am I doing? That area is a significant demand area. Very significant demand area, which by implication, the moment price comes back to that place in future, there is a very high tendency that traders will jump into that position and start buying again. Hence, we are going to have another bullish move. Hence, you will see how we played out very easily over here, right? The moment price tapped into that point again, you will see another massive move to the upside. So this area is still a very, very valid area to still trade with, okay? Because price is not really far from that area at the moment. Now, where do we also have another impulsive move to the upside? We had another one here. We had another one here. You see this massive move to the upside, right? The candle preceding it, which is this one. So I mark it from the high all the way to the low. Mark it from the high all the way to the low. Okay, then I extend it to the future. Okay, good. Let me take it from the high. All right. Good. So I extend it to the future. Now, what am I doing? I am marking out potential areas where I expect price to continue on that particular momentum. Sorry about that. Okay. Now, because the first thing you must do, understand, is to understand the current flow of the river, the current flow, which we call your market structure. Your market structure is price moving to the upside or price moving to the downside. So one of the traps we also fall into as traders is the fact that if this is supposed to be a downward movement stuff, price is supposed to be moving to the downside. Do you notice that once price is moving to the downside, there is a very high tendency that whenever you have a support level, price breaks your support. There was support here, right? And at some point, price came and broke support, right? There was support here, price broke support. So support will be broken whenever price is tending towards the downside. Now, if you don't know the market structure, that price moving towards the downside, and you keep buying from every support, you will buy from a support at some point and price will break that support. Okay? So when we say the basic rule, buy at support, sell at resistance, you need to know with the direction of the trend. It is not isolated from the trend. We are buying at support in a market that is trending to the upside, and we are selling at resistance in a market that is trending to the downside. Okay. Someone says something here. It's about to change character because the retracement is getting deeper. Okay. Yes, price is changing character. I don't want to use bogus language, break of structure, change of character. Price broke a resistance level here. Price broke it after sweeping a little bit of liquidity to the upside, broke it here. Now, took that same point again and rested on it. Now, remember that as much as this place is a resistance level, I wish I can just pour everything in my head right here for you guys. As much as this was a resistance level that price was respecting, the moment it broke resistance, now the rule also says that when price break resistance, resistance should become support, right? Good. But you see, there are times where it is not every resistance that becomes support. As much as there was a resistance here that was broken, there was a massive demand area from here that started that impulsive move that broke this particular resistance that made market to start changing structure, right? So hence, as much as I focus on it, price has a way of coming all the way down to the demand area first. And by implication, there's a much more larger level of liquidity here than at that resistance area. Okay, we'll talk about liquidity maybe another time. Because you need to understand all of these concepts in order for you to trade effectively. Okay, so this is the area we're going to focus on. And I think I've given you a simple trick to identifying such areas. Just mark out the candle that precedes the candle that started a very impulsive move. If it is to the upside, mark the high and the low of that candle and extend it to the future. If it is to the downside, mark the high and the low and extend it to the future, irrespective of the direction, right? But first, understand your directional bias. To the upside, here's demand, right? Now, you can notice that this current candle is struggling at this very point, okay? So for some people who don't know how to follow trend, continue trading direction of the trend, this is a good area to buy from. This is a good area to buy from at the moment. Now, hence, if price feels that there is not enough liquidity at this level, there is much more a larger pool of liquidity down here, then this guy is going to break this particular level and come all the way here and pick liquidity again before heading to the upside. Remember, this is still our major demand zone, right? This is still our major demand zone. Now, what is the difference between here and this level? Price has only tested this level, like, okay, got to resistance, it broke resistance, and it's trying to test it for more like the first time. It's trying to test it for like the first time. So it's not a strong level. But price has broken this one. It has tested it again. So meanwhile, it was a resistance before it broke it and retested it as a new support level and demand level. So here is a much stronger level than this, okay? But I will not be surprised if price keep going up. Hence, what you do is this. You buy from here at current market price. You might not have your stop loss. You can wait for price to tap down into this demand area again before it starts pulling up. Either ways, buying is safer than selling at the moment for USD JPY. All right, good morning, Nusa. Buying is safer than selling. For me, I can buy at this current market price. I won't have a stop loss because I know there's another level here. So by implication, if price drives all the way down here and gets here, then I'm going to buy again. All right, I'm going to add to my position, right? So because I expect price to still go all the way up. So this is for USD JPY this morning. Price is expected to be bullish. At Salisu, Ololu, please, I would appreciate if you don't drop any signals here. This is strictly for rally trade, and it's not where you're going to start advertising your product. Please do not post these signals again, please. All right. Thank you very much for your understanding. All right. Thank you so much. All right. So that's for USD JPY. Let's look at another currency before we GBP JPY. I was waiting for this guy. Euro USD. Okay, let's look at Euro USD. We're just going to be copying and pasting this particular strategy that we looked at. Very simple. This is something you can do in a matter of seconds and you are out of here. Let me not use these indicators. Using pure price action at the moment. Okay. Now, this was the FOMC effect of yesterday. Price starts FOMC weakened dollar, so Euro USD pushed up, and you can see an opposite movement. Okay. Now, remember what we did for USJPY. What is the overall general trend? My weekly time frame is telling me that this guy is what? Up or down? Up or down? Guys, we are doing this together. Up or down? Okay. Yes, about I believe it will be buying till the end of the year. Good morning. Up, 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 down. Wow. I'm saying, from what you can see, this is my weekly time frame, and this is Euro USD. Does this guy look like an upward trend or a downward trend? This guy looks more like a downward movement. All right. Down, exactly. Down, down. Good. Now, apart from that, so I check my 4 hours now. My 4 hours telling me currently is price going down? At the moment, is price going down? Not exactly. No, price is not going down at the moment. Okay. Instead, price has been pulling up and right now doing a little bit of ranging. So price is not going down at the moment. Now, when price is not going down, there are 3 ways to trade this thing. There is trading equal highs, which gives us a possible resistance level. Then if it ranges a lot, we have our range. And on the third one, it gives us a trend. So price is actively not giving us a trend at the moment. Let me see other responses up at the moment. So let me see. Some persons ask some questions. Is it advisable to buy at any demand whenever we see a demand candle like the one you drew out? No, sir. No. Awojobi Felix. I said, first thing you need to know is your directional bias. If my directional bias is to the upside, then I'm going to be using my demand because demand, buy at support. Demand is still the same thing as support. You buy. But if my directional bias is giving me to the downside, I look for candles that started the move to the downside. Let me see if I can have a possible scenario here. Let me see if I can have something when price was going down. Okay. All right. So this is something like this. When price was going down here, now this was the candle that started this. I had a very let me start from here. I have an impulsive move here, or I have a major move here. All right. So this was the candle preceding the move. I mark it up like this. I extend to the future, right? This bearish, this bullish candle, the green one, I mark the high and the low. I extend to the future, isn't it? Good. So by implication, I'm waiting for price to tap back into it for me to sell from that level. Because now the directional bias is a downward movement, okay? So hence, I'm not looking at buying. I'm only looking at selling. This is where your resistance becomes powerful. I cannot be buying from support at this point because price can, there's a support, there's a demand level here, but I am not taking demand level now. Demand level is irrelevant. Demand can be weak. Price can easily break my support or my demand level and keep going down because the directional bias is downward. Okay. So, but instance where directional bias is upward is where your demand becomes effective. All right. So you don't just buy from any demand or sell from any supply. You first of all do it with reference to the trend. All right. Aha. So thank you very much. We're talking about Euro USD, right? So Euro USD now is not giving us, it was first of all up. Now, since this up, it has been ranging. So we are going to mark both the highs and the low. Sooner or later, we are going to have a break of structure, right? So let's put this one as our sell area. You notice that price stacked back there again. Okay, this is my 4 hours. Oh, let me use my 1 hour. Sorry. So sorry about that. Oh. Okay, so sorry about that. Let me take this one out. I was on 4 hours time frame to get the directional bias. So on my 1 hour, okay, price is looking like a massive range. Price is looking like a massive range. Came to the downside. Now it's trying to pull to the upside. Abi? Now, on the upside, here is the recent high. Here is the recent high, the resistance level, all the way here. Okay, this is the resistance level. And to the downside, I have my support level. I have my support level, okay, which was a little bit tapped into. So this is my most recent support level down here. Okay, so I also extend it into the future. Now, by implication, when price was moving up, so price is trading inside of this range. So I'll have massive upward movement, massive downward movement inside of this range. All right. So right now, price still needs to get as high as this level. It got there yesterday from our FOMC. It did. It got there yesterday. Price got there yesterday. You can see how it tapped into it and retraced from the FOMC. Hence, price is most likely still going to tap into this area before it starts to fall. price is going to tap into it before it starts to fall. And why did price stop here? If I look at my previous impulsive move, now it was ranging from here, so we don't have impulsive move. Previous massive move to the upside, where was it? The support area or the demand area was here. And if you extend it into the future, are you seeing what I'm saying? All right. So this is the candle preceding it. I might be high at the low, which exactly it is. So that was why price came, tapped into this level, and it continued. Because whenever you have an impulsive move, there is most likely bound to be an area, it's going to become an area of imbalance. There's going to be a lot of fair value gaps inside of those levels. Strategy we'll talk about another time. So price need to find a way of covering this imbalance before it continues to the upside. Okay, it's more like how will I put it now? How will I put it? Price needs to go up. After going up, so I'm moving from Lagos, I'm traveling from Lagos to Abuja. I fill my tank, the tank of my car. Once I move, if I get a particular point, I notice that I'm running out of fuel, right? What do I do at that point? I need to refuel. Okay, so price started running out of fuel to continue going up. Price need to refuel before it goes back up. The nearest filling station, price has passed it. It needs to go back. So what it's looking for is areas of demand. So it will look for previous area of demand. So this was the last area of demand. So that's why there are times where price can come back, all right? If the move is so massive, you have some good level of retracement before price continues in that direction. Okay, so that's what we usually wait for as traders. Let me tell you something. You are an opportunist, right? Try to look for opportunities. And once you find the opportunity, you are going to be trading perfectly, right? Thank you so much, Oluwagbemi Gafaniyan. So there's a lot to this. Please note that there's a lot to the strategy I'm giving you now, but I'm just breaking it down to make it very easy for you guys to understand, teaching you a way around it. Please do well to attend our trainings. We are going to be having massive trainings, a lot of events for this coming week. And in case you're in Abuja, for next week, we're going to be having a special training for these strategies also, right? I'm going to be teaching, there are 4 of them, all right? How to learn the best way to trade, the best way to trade. Now, if you use this strategy to trade, at least in a week, you should have at least 3 to 5 areas on one single instrument. You might have at least 3 to 5 areas where you can buy or sell from accurately. And if you do that on one single trade, you can make 20, 30, some people can make 50% of their capital. That means they go in hard because this becomes a very short trade, right? Yes, you can, it's currently being live streamed on YouTube. You can get this video once we are done. Just go to YouTube and you can watch this video again to learn the strategy, right? So that's what we are talking about. Hence, price need to get to this level in Euro USD before it starts to fall. Now, what do? Should I buy it knowing that price needs to get here before it falls? Or should I wait for it to get here, then I sell it again? So which one would you do? I just want your opinion, please, before I conclude on Euro USD. Which one would you do? Buy it in the hope that it will get here, or wait, just if you are going to be buying it for it to get here, just write buy. If you want it to get here first before coming down, just type wait. Wait. Oh, okay. Wait for resistance. Okay, exactly my point. Now, it's not as if I'm trying to follow what you guys are saying. Majority does not always carry the vote in this market. So yes, obviously, I need to wait for price to get here. So I need an inducement for price to do that. There was one here already. Okay, a lot of liquidity above swept, came to the downside, but picked up more. For the fact that it responded to this demand area means that it wants to push up to this level. Okay, so once it does, we are going to be selling it. So wait for price to tap in here, and we're going to be getting a massive sell trade for this level. Hopefully back here, and if you are lucky enough, for the rest of the week or even next week, all the way back to our support level. So for this is our analysis for Euro USD. Okay, so copy and paste, copy and paste. Someone said gold. Let's quickly look at gold before we go to US 100 oil. Okay, now we all know that gold has been trending up for a long time. Let me take out this my indicator. This one will look like a cheat. And all of these strategies I'm talking about, this guy will just draw everything out for you. In fact, including the demand areas. Okay, look at what I was saying. My demand areas for buying here started this impulsive move, so he marked it for me here. Now this another impulsive move. Okay, there's also one here, and there's currently one here. So there are different levels. Just going to mark it out. Let me take this one out. Let's use pure price action. I need to teach you how to mark it out for yourself. Okay, now my directional bias, my weekly time frame, gold has been an upward trend. But before gold trends, most times it ranges here and here. It ranges first before going up. So someone will be asking, why don't I put my support level here? Why did I put my support level here? No, this is where the support ought to be. The previous resistance that was broken, resisted again. Okay, so price was in between this range. It was trending inside this range for a long time, and it has gone out of that range. And once it got there, it found another range here, which it took out last week. Okay, so now is price currently moving to the upside? Yes, my 4-hour time frame. Price is currently tending to the upside after breaking our resistance level here. Okay, so let me take all of this out again. So let's start again. Now, since I know price is moving to the upside, this is my 1-hour time frame. Irrespective of your time frame, either use your 1 hour, your 30 minutes, your 15 minutes. This was FOMC as of yesterday. All right, upward movement, downward movement, upward movement. And for the fact that the dollar is weak at the moment, oh, sorry. For the fact that the dollar is weak at the moment, 7% gold will have much more momentum to push up faster. What day of next week will I be taking this class? Hopefully next week, Tuesday, and possibly Thursday again. All right, Tuesday, Thursday again at Michael. All right, so price is most likely for gold to continue pushing up till it gets to our resistance level. Where is this guy? Sorry about that. Till it gets to our resistance level. Now, certain instruments respond slightly differently. Now you can see this guy pushed upward here. Okay, responds slightly differently to some of this analysis. Now, we cannot get a clear support from here. I need to show you something. After CPI of last week and PPI of last week, that was what made gold to break above this range here, this resistance level. Gold broke above this resistance level and this support level. Gold broke above this level. That was last week. And the moment it broke that level, if you remember what I told you, let me still extend it so you will see. Now, the moment it broke this level, you can see a massive area of imbalance. Massive area of imbalance, all right? And price continued going up. Now, remember that after price consistently goes up, there needs to be some level of retracement before that upward movement can continue. So if you notice, it had massive momentum, then it started losing steam, started struggling. So it needs more juice to continue going up. It needs more strength. So it needs to come down and pick strength. Now, what are we looking for? We are looking for strong areas of demand or where we have a lot of liquidity, right? Liquidity, by the way, means money. We're going to explain that concept another time. So here, now, remember, a very impulsive move that broke this resistance. Which candle started that move? This bearish one, this red one, the one preceding the one that started the move, right? This red one, the bearish. Hence, I'm going to be picking the high and the low of that candle. Okay, the high all the way to the low of the bearish candle, and I extend it to the future. I extend it here. Good. So let me change the color of this guy. It's just simple copy and paste. What I'm teaching you are powerful strategies. You can hardly go wrong with these guys. You can hardly go wrong, trust me. Okay, so this was our left area of demand where the impulsive move that took out this resistance started. But this is still our resistance. Remember the basic rule of trading that once a resistance is broken, that resistance can end up becoming support in case price comes here, right? Can end up becoming support, and hence we expect to buy from it again. Abi? Good. But there's a conflict of interest here. If you buy from here, what you most likely happen when price comes all the way down is the fact that you will notice that price will come down but not stop here. It will go below and come to the area of demand. It's going to come here. Mark it that the day that price comes all the way to this previous resistance broken, it's not going to stop all the way there. It's going to pierce inside and come here because there is demand zone. This is where the pool of the money is. This is where the liquidity is resting. All right. So instead of just coming to take out your level of resistance here, price will come inside, and this is what you're most likely going to see. So for those of you who would place a buy at resistance when price gets here and you have your stop loss, it will mostly take you out. It's mostly going to take you out. So you need to wait for it at this level of demand, all right? Instead of this level of resistance, which is now our new support that price broke. Now, hopefully, I don't think price has enough momentum to break above resistance and continue going up yet. Why? It has not picked enough momentum from this level. It has not. FOMC brought it down, but it didn't get as low as this or this level. So most likely price will push up to this place, then start falling again. Okay, start falling again. So let's wait for gold to get to this area. Then we start selling gold. Let's wait for it to get to this area. We'll start selling gold again. It will push up to this level. It will definitely push up to this area, and most likely even to this level. This level that FOMC pushed it to as of yesterday, it will push out to this area here. So if price look like it wants to break our resistance, don't bother. Here is no longer that relevant, so let me take it out. This is where we have our relevance right now. So price will push up to this level. So we are going to be having an equal high liquidity sweep from here. So if price can get to the level of this candle it got to, the high of yesterday, if you can get there, let me use my 15 minutes to look at it. If you can get as high as this level, just wait for it to pierce it a little bit above it, right? Just wait for price to go slightly above it. All of a sudden, it will start running down, right? It will start running down. So we are going to be selling from this area here. We are going to be selling from this area here, okay? From this area here. And it will get there very fast because gold is down. What time frame are you? I usually use my 1 hour time frame, but sometimes if it's not clear, I go down to my 15 minutes time frame. So I'm currently on 15 minutes, but my analysis is majorly done on 1 hour, right? So price will go up, pierce, get to that level of the high of yesterday. Sweep out, there's a lot of liquidity there, sweep it out before massively falling. And someday it's going to come all the way here again, most likely. The day gold comes here and start pulling up, that's where it's ready to break this resistance again and keep going up. Okay. So someone said US 100. Let's quickly look at US 100 before we look at GBP card. US 100. We're almost out of time. We are almost out of time. I'm not sure we are able to do US 1000. I'm not sure of that. Okay. All indices are generally on an uptrend. That's a free information for you. All indices are generally in an uptrend. generally an uptrend. Okay, so this is my weekly time frame to confirm general uptrend. But the problem that I have with indices is their retracements can be severe. US 100, US 2000, their retracements can be severe. And on my 4-hour time frame, okay, price is still actively pulling up, right? But inside that active pulling up, you can see that it has taken this particular, let me see. This is the most recent highest point. Okay, let me put this way. Most recent high points. Let me signify that on my here. Most recent high point. Then price made another lower low here again on a lower, but it made another lower high and everything. So this is another high level again. This is the most recent resistance level that price has gotten to for US 100. And this is our recent support level. Now let's mark out, since price looks like it has been going up. Let me go to my 1-hour time frame now. For some days now, price look like it has been going to the upside. Okay, so let's mark out our demand areas. Okay, our major demand areas. So this impulsive move here, let's see, this was the candle that started it, this bearish one here. So pull all the way. The zone is very large. The candle is a large candle, hence the zone is very large. Okay, now don't misunderstand me. It is this red one, this bearish candle, not this bullish. So I'll just shift it here. Okay, the high and the low. Let me change the color of this guy. I like using green for my supports. So I push it to this level into the future. Okay, so any day price mistakenly come back there, that's another area of buying. Now it might not, it might, and it might not. Now, before then, there was an area of resistance also that was also taken out. This area. I don't know why my system is so slow. This area of resistance was taken out, and this was a move that took out that area of resistance. Now, if you notice, remember, price has run out of juice, right? Run out of juice, but it is still gradually pulling up. Now, if FOMC did not happen, price most likely would have come back here and most likely here again to gain more momentum to go up. But I'm still expecting a massive drop from US 100, and owing to the fact that it has gotten to a previous resistance area again. That's why I like differentiating them. My red is resistance, anything blue or green is my support. Okay, so price has tried a lot and it has gotten to area of resistance. So I think a sell is good at the moment for US 100. Okay, and we are targeting this level again. On my 15 minutes, yes, it's the same thing. Yeah, so this is what I'm expecting for this guy at the moment. So if you have multiple trade, your first TP can be here. Your second TP can then be at this particular level here. Now, this is indices, all right? So I want us to be very, very safe. You can have your stop loss somewhere above, to avoid stories that touch, all right? So, but I'm still expecting price to still cover some imbalance that happened here, and I've not really seen that happen. So I'm still hopeful. And for the fact that it has gotten to a previous resistance level that started a move to the downside, price might want to respect it and pull price down back, right? So that might be the move that will bring us all the way back here. Okay, so please, that's what we are looking out for US 100 currently. That will combine smart money concept, SMC, and price action during our analysis. Is it that we can combine smart money concept and SMC and price action? Yes, actually, every tool at your disposal, right? At Victor, every tool at your disposal. All the smart money concepts, you can combine them with price action. Price action is mostly used for confirmations of trade. Price action is not used in isolation, mostly used for confirmation of trade, okay? What do we recommend? TP for USD JPY. TP for USD JPY If you buy from here, target the next high. Okay, let's not be too greedy. Target this next high. And if you are buying from here, that's where you can be very greedy and still target this next high. Okay, if you buy from here, target, oh, it started buying already. Okay. Is anybody in the trade? Did anyone take the buy? USD So target this level, this previous high as your take profit level. Okay. And I was thinking perhaps if it doesn't stop here, if you get here, then you are targeting here. So this trade will give you a less risk to reward than this one. This one will give you much more profit if it had come down here, but here will still give you some good profit, depending on your lot size though. Okay. All right. It's past 9 already. It's past 9. I'm sorry, we have to call it a day right now. We have to call it a day right now. But I'm going to see you again next week, Tuesday, next week, Thursday. And remember, we have a lot of training, a lot of events coming your way. I think for next week, we're going to be also be having AI. Now, all of these things we just did, you know, AI can automate it for you and do it for you effectively. Okay, someone said GBP card, what's going on there? Are you on a trade? Please, can you just permit us to just help this person on GBP card? Let's see what's going on there. Okay. Let me guess. If you're on a trade, you've been selling this guy and it has taken out your resistance. Now, yes, take out the resistance. Remember, if you look at your 4 hours time frame, in fact, let's look at our general trend. Okay, this guy does more of range. And if you look at your 4-hour time frame, price has been pushing to the upside down, and upside. So inside of this upside, we are looking out for more buy. It ranged here, and because of that range, possibly you took a sell trade, right? So it took out this resistance at this point here. And which move took out that resistance? Which move? This was the move where the move started from that took out the resistance. So not just resistance, our demand zone is lying somewhere below here, which also coincides with our liquidity. So what we expect, webinar into blank is, so what I'm expecting for GBP card is the fact that this area of imbalance has been covered to an extent. At least once price can do 50 to 61.8 retracement level on, if you're using your Fibonacci, then we can say price has tried to an extent and is continuing that trend. The only thing I can say for now that will most likely bring this guy down. Wow. This guy is operating at one of the most recent highs. He just broke a very high point, a resistance of 2020. He broke that resistance of 2020. Wow. And before then, he respected it twice here. 2024, July, and respected it August, and now it has broken it by September. Okay, so I need price to come back to this level. So this is what I'm going to be doing. Let's look at the most recent. This is a massive move, and which candle started this bearish one, right? So I'm waiting for price somewhere around here. Okay, I'm not seeing impulsive moves here. I'm waiting for price here. I don't think, for the fact that price has not been able to break above this resistance and continue going up, it means that it does not have enough liquidity to continue to the upside. At some point, it's going to come back here. Once it can successfully pick this guy, that's where it's ready to break this resistance and go continue forward. So in case you're on the sell trade, price will retrace here, but I don't think it's going to come back all the way down. So I think this trade, they're going to close it in negative. But this guy, the overall position is an upward movement, but you need to wait for price to come to this level first before we continue buying our GBP card, okay? Before we continue buying our GBP card. So I think this is a summation of our analysis for today. The summation of our analysis for today. Please contact your account managers. We're going to be having AI Invasion in Lagos, in Ibadan, also in Port Harcourt for next week, right? Thank you, Mr. Shim. We're going to be having all of that for next week. Okay. Let me see. Then also the YouTube link will be posted so that you can have this video again, and you can have a lot of videos. Trust me, there are guys in Rally Trade that have been giving excellent training and even beyond what I'm telling you right now. So you can go over to our YouTube page at Rally Trade, and you can have access to a lot of videos, right? Have access to a lot of videos. Okay, we're going in. All right. Looking forward to seeing you next week. All right. Thank you so much. And in case you want to have way more of this, you can join the mentorship program so that you can have all of these at your disposal. And that's where we start making the big money. Okay, just send me your email address and something will be done about it. This is my number, 265-824-93. All right. Victor. Okay, this is my name, phone number, name. So you can have, just send me your email address, and trust me, your account manager is going to contact you in less than 1 hour. In case you feel your account manager has not checked up on you or you don't have enough information, just send me your email address. This is my number here. Call me or send me your email address or WhatsApp. Then your account manager will call you in less than 1 hour. Right? You are in Benin, irrespective of wherever you are. I'm sure we are going to be having something for Benin, which your account manager is also going to be communicating to you. Right? What else? How do I join the mentorship program? Just call me up. My phone number is there. Just call me up if you get it. What else again? Automated. Okay, so as you can see here, that has been dropped for you. We have the automation in Lagos. Okay. Also, we have it in Ibadan. We have also in Port Harcourt. All right. We are looking to do that of Abuja very, very soon. So, guys, please just start contacting your account managers right now. And if you can't, if you don't have their contact, 265-824-93. All right. Okay. We are going to have something for Oshogo too, as well as in PH automation is by next week. And you can head over to the office in PH. I'm sure Odogo Emmanuel and Don, all of them there, they are ready to give you all the information you need and as well as the training you need. Okay. So please, please help me to help you. The way I can help you to get all of these things to maximize them is I've dropped my number. I've dropped my number like twice. I've dropped my number like twice, guys. Okay, let me copy it again. I dropped it like twice. Okay, here's my number again. So please just call me up, chat me up, and send me your email address. Then I'm going to make your account manager contact you. He's on WhatsApp. Yes, it's on WhatsApp, right? So thank you very much for your time this morning. Looking forward to you having a very, very profitable and peaceful day. All right. Thank you very much. Have a wonderful day.